Well, hi folks. My name is Mike Norris. I'm your host for this little video presentation on escaping the credit card trap. I'm giving you a little basic information for you here, just so you know if you have questions, you can contact me. I'm happy to help if I can to assist with these concepts. With regard to the credit card nightmare, they never pay off. That, in fact, is the dirty little secret. Credit cards are not designed to be paid off. They are designed to be paying to the credit card lender forever and ever and ever. And this is your dilemma as a consumer or a small businessman. They are, frankly, the worst type of debt to have. The growing problem is illustrated quite easily. 4.8 billion offers in the U.S. Based on the third quarter of 2010, their mailings, there would be 4.8 billion offers per year. 15 cards per person. Oh my goodness. The temptation is overwhelming. 610 million credit cards held by U.S. users. Our census most recently says that 886 billion in credit card debt will rise to about 1.2 trillion in 2011. Experts say depending on high interest rate credit is the mother of all consumer finance problems. It is frankly quite an issue in America today. Just how does it all stack up? Well, if you were to stack up the credit cards, they would reach almost 29 miles into space here in the U.S., taller than 5 Mount Everests. Half of our consumers don't pay the balance each month, and that frankly is what causes the problem. Borrowing for a business use or for a house or a car is, to most of us, acceptable, and yet many of us will borrow just for a meal and 10 years later still haven't paid off the balance. Does the meal still taste good 10 years later? I frankly doubt it. 1 in 10 have 10 cards. The average U.S. user has 4 cards. And this creates a lot of trouble for individuals. Average credit card debt per household with credit card debt, almost $15,000. Average interest rate for credit cards topped 19% in March of 2007. It is now 15%. Now bear in mind, that is an average rate of 19%, which balances out the 9% cards and the 29% cards. That is an average rate. Now 15% is the average. So much higher than most of us would consider prudent for a home or car loan. 25% is the rate that we see for those who have bad credit, and bear in mind again, this is an average rate of 25% for those with bad credit. As a matter of fact, some rates I've seen go up to 35.9%. Well, if you do the math, even 25% of the average credit card debt per household is $3,700 just for the privilege of owing the money. Bear in mind, $3,700 after tax. Probably it took you about $5,400 to earn enough money to pay $3,700 to a credit card lender. So it's really quite expensive when you think about pre-tax dollars. Credit card payment, where you can just take your cash reserves and pay them off, is a wonderful investment. Let's say you've got a 30% card and you have a CD that yields 5%. Gosh, you could have a 25% return on your money. And why should life be 15, 20, 25% more expensive than it needs to be? Let's face it, houses and cars are necessities, but really, eating out or Christmas presents, as much as we love them, should they be 20%, 25% more expensive than when you bought it? And bear in mind, that's 20, 25% more expensive every year. You pay that tax to the credit card lender. With modest CDs earning maybe 6% if you're lucky, it's really best to withdraw and pay off your cards. On an 18% card, you have a 12% gain. My own humble opinion, dear friends, cut up your cards today and target the high interest or the small balance cards for immediate payoff. If you don't have cash, a yard sale, or not eating out, keeping an old car, any of these things can be very useful to help you move down the road towards solvency. A lot of folks have thought in past years that a home equity loan would be the answer. When I first put together this little presentation on PowerPoint in 1998, oh gosh, the home equity loans were running rampant. People were doing what they called equity harvesting. The concept being take the money out of the house. But wait a minute. Just because you owe more doesn't mean your salary went up. Doesn't mean you can pay more. 66% of those who refinance run up new credit card bills. Hey, let's face it, free and easy money is unfortunately too free and easy. Debit cards, on the other hand, offer convenience and accountability. And many second mortgages are not at the best interest rate. I've seen them in my office here with consumers, 12%, 15%. Some lenders will even charge 18% on a second mortgage. It's really hard to make those payments. And of course, with a second mortgage, the home is in jeopardy. It can't be sold merely by paying off the first mortgage. Something to keep in mind. Now, if we think about cards with low rates and how nice it would be to have cards that have low rates, that's fine. But it may be just an introductory rate for 6 months. And if you're late on the payments, they can recalculate the interest. A couple of times late, it's going to get done. And you still have late charges, over the limit charges, and cash advance fees. It's really better to live within your means. And again, the debit card, I highly recommend it. It really helps with a balanced budget. Now, the real question we have to ask is, what the heck do these cards cost me? How much am I spending on these darn things? A $10,000 card at 24%, just taking an example here, would have a payment of $300 per month. That's 1% paid down towards principal according to new federal regulations, plus paying all the interest. Well, 2% of that is interest. The other 1% of the balance that's paid goes towards principal. But that means 2/3 of each payment goes towards interest. Very little to principal. If you continue with the minimum payment, and that's the secret of the disaster, that's the real dirty little secret revealed. If you continue with the minimum payment, the amount of payment will decline each month, but the trouble is, it's going to take 25 years to pay off, always paying 67% of the payment to interest. You're going to pay almost $19,000 in interest over time. Isn't that shocking? You're going to pay nearly twice as much as the debt in interest. When you think about the old days of simple interest, 4%, you got the loan for a year, or 5 or 6%. Maybe they would compound the interest, recalculate interest every month. But basically at the end of a year, if you had a loan for a year, you'd pay 6%, maybe 7% more than the principal itself if you paid it off in the year. But on the other hand, here we are saying the credit card lender will be generous with you, let you take 25 years, that being a half to a third of a lifetime, and you're going to pay twice as much in interest as the principal value of the debt, the principal, the loan amount. Amazing. If you want to check these figures, I welcome you to use a calculator. They are across the internet. Here's one that I found that shows exactly how many years using credit card interest computations it'll take to pay. How to avoid the credit card trap? Well, assuming that you already have the cards, the most important thing is to keep the payment level. Don't lower it if the interest is still high. At $300 a month, you just stay at $300 a month. It's going to take 4 years and 8 months to pay. If you lower it a little bit, well, it's going to take a little longer, but it won't take 25 years. It'll take a quarter of 25 years. And if you lower it to $210 a month, It'll take 12 years, that being about 1/2 of what it takes when the minimum payment keeps declining. On the other hand, if you want to pay even less, bargain with the lender for a lower interest rate. $150 a month really makes more sense at 9% interest, a fair return for the credit card lender. You could pay it off in less than 8 years. And bear in mind, this is half the payments you had when you started. You've gone from $300 to $150, and you're paying it off in 1/4 the time you would have paid it off with the minimum payments that were suggested by the lender. And to boot, a reasonable interest rate to the lender. Here's the bottom line, folks. You want to get credit for the payments you make, not constantly be making payments that aren't recognized as paying down the principal. Once you're in the credit card trap, how to get free? Well, bargain for a better interest rate. Call them and tell them, look, this is just way too much. I can't do it. A debt settlement with a local attorney can be used. We do a lot of debt settlement for folks here in Indiana. I recommend a local attorney because when the lawsuits start, you've got to have somebody there for you to protect you. Using an out-of-state debt settlement company, particularly not attorneys, very foolish. When push comes to shove and the creditors start playing hardball, you're going to need a local attorney. Might as well get him on the front end. Of course, the bankruptcy options, not always popular, but they are possibilities. They can be used to restructure debt. And frankly, if there are no other options, I think bankruptcy certainly beats being in debt for 25 years just because the interest rate is insane. Consumer credit counseling, I do not recommend. Consumer credit counseling is actually the collection arm of the credit card industry. They receive a kickback of up to 1/3 of what they collect for doing the credit card lender's collections. For that reason, I do not recommend them. If you want further information on that, there is a United States Senate subcommittee report from 2003 that talks about how this industry operates. For further information, I am Mike Norris, an Indiana and licensed Colorado attorney practicing actively in Indiana now. 32 years in practice. I love teaching. That's why we put together this video. I have a heart for helping people understand that knowledge is power. I was a college professor for 6 years, richly enjoyed that. If you'd like more information from me, pay attention to the blog on MikeNorrisLaw.com. We're starting to blog more and more on these important issues. And now that we have YouTube and have figured out how to sign up, why, I'm going to try to put out as many videos as I can to be informative to the public. Or if you'd like, you want to know the broad brush of finance and how the game is played, how this works, please write me an email, mike@MikeNorrisLaw.com. I'll try to assist you any way I can. Or if you have a quick question and you want to just call the office, we'll see if we can be of help. Of course, if you are an Indiana consumer or small business, I can personally represent you, would be delighted to do so. On the other hand, in other states, the best I can do is help you understand the process and how things work. But the most important thing you should remember is knowledge is power. Gather as much information as you can on your financial life before it slips away as dust in the wind. Well, thanks for listening. I appreciate your time and attention. Mike Norris, signing off.